we're going to do is we're going to take a look at the process that our subscribers go through to obtain this information. When you subscribe, you get a private password that you use basically when you come into the members area. You click on login and this will take you to the members area. You put your password on the left here, click enter, and this will give you the choice and selection of your subscriptions, which we use to trade in the live trading room. And so if you want to take a look at the daily future stocks and ETFs for day trading, which is the algorithms that you see in the room, then click on that. On the search window, if you click on the date of the algorithm, which was yesterday's close, always yesterday's information, statistics is what we use to identify tomorrow's trading ranges, support, resistance levels, and trading opportunities. So in this case, we're using the closing price of basically the February 18th report that was published yesterday. This report is published every night by 7 o'clock Pacific Standard Time. And on this report, we cover gold, silver, crude oil. We cover the Russell 2000. And we also cover ETFs and securities like JNUG, Nugget, USLV, and UCO that are related to the intelligence that we produce in the precious metals markets, which are the charts that you see above here. On the left you see gold, on the mid chart it's silver, the right chart is crude oil, and the chart below basically is the ETF that we use, that we traded today in the crude oil market. And we're going to review basically how we apply this intelligence in identifying the signals. What this algorithm does basically is it gives you the previous close, open, high, low prices that identify the support and resistance levels for the following day. This is the subset of support and resistance levels that we use basically integrating our algorithms to identify clearly price levels that you can execute a signal. And basically the application is that based on the fact that the market closed at 1200 on February 18th, today if it breaks or goes through 1204, then it gives you a price range where you can take a profit basically of 1209. If you have multiple contracts, then you can use the 1219 area where you can take out additional profits if you have multiple positions. If the market basically trades, let me go back here to the algorithm for the 18th. If the market trades below 1204, it activates a short signal, and it tells you basically your buy one level to be 1194 and your buy two level to be 1199. In silver, pretty much the same logic. And 1603 basically was a buy one, buy two level is the 1615. And these are the levels that we post in the room that we use to identify basically day trading opportunities. This is the day trading algorithm that we're showing you here in the room that we use basically to make $2,275 overnight. And I'll get into more each of the trades and show you how we execute this information. One of the things that we do differently here, ladies and gentlemen, is that we give you and prepare you for the intelligence to be applied and executed the following trading day. Nothing is a surprise for us when we come into the room. What I do is I take these algorithms and I post them here on the website, and this is what you see here. These red lines basically correspond to crude oil level 2, 5502. Level 1 is 5358. And by 1 level is 5053, by 2 level is 4892. The logic to use this as a day trading tool is that when you come into the room or when you start to trade, you're trading from a neutral position always. That is the beginning pattern or the beginning of your actions in trading. What we suggest is that you allow for the market to trade for the first half hour to an hour, or you wait for the price to activate the signal by crossing the code, by basically reaching the code. And last night we took a signal in the gold market that basically was in the low 1628 area, and it told us to take a profit around close to that 1670 vicinity. And so we with the algorithm here today and the high today of 1676.50, it was more than sufficient for us to make a quick profit as we did, and benefited by basically making $2,275 on one contract. That's a nice move, literally in 24 hours. The signal here that you see in the crude oil market futures was activated as a buy. You can see on the crude oil the buy one level was 50.53. When the price reaches or crosses this level, on the close above it, it activates a buy signal for you. Your stop is the code below, your target is the code above. In this case, the 52 level that was accomplished earlier this morning, and we produced a $300 profit trading one contract. To show you the flexibility of this algorithm, which is phenomenal, is that when we do trade in the futures markets, as you see this action today, we also identify basically the related derivatives that are connected to the futures market. So at the same time that we made some profits today in trading the crude oil market, we are trading the UCO, which is the crude oil Bloomberg ETF, inverse ETF, that is an aggressive way to trade the volatility when you step out of the futures contract. Also, it's a great way for you to manage your risk, and it gives you the ability for you basically to stay with a position overnight. As you see here, the buy one level told us that we want to go long at around the 860 area, which is the level buy one here that you see. 838 here was the early signal that we activated, and even though the market came below that B2 level, the ideology of this methodology, or the nuts and bolts basically of this mathematical formula, is that when the market price reaches below the B2 level, it is at the most oversold condition, and the probability is that the price will revert, or will try to revert to its mean, which is the VC code or the pivot point for the day. And as you can see here, the energy seems to be doing exactly that, following that pattern. So we went back into the market once again. We are long at 865, and we have a target of 897 that we could be accomplished today. So the active signals basically that we traded today happens to be in the crude oil market, as you can see here. And the silver market, we traded on a swing trade. In addition to you receiving these daily algorithms that allow you basically to identify day trading opportunities, we also produce a weekly report that you can use for swing trading. And we cover that for gold and silver, and the logic of the algorithm is the same, except that we describe it a little more in detail and use some of the moving averages that we use in this case. The April futures contract closed at 12:28 on Friday the 13th. We're talking about last week. And what I want to do is show you how we use the weekly report for you to swing trade the market into what I believe some above average returns, sometimes within 24 hours, as you can see here on the silver. And you're going to see why we traded the silver yesterday. And so we're looking at the gold market basically closing on Friday at 12:28, which was below the 9-day moving average of 12:36. And we used the 9-day moving average as an indicator excuse me, that tells us the momentum of the market short term. And in this case, it confirms that the momentum is bearish coming into this week. But it also tells you that if it closes above the 9-day moving average, that the trend, the negative trend, will be negated to neutral, and a close above 1236 would activate the uptrend. So this is telling you, even though the market closed below the moving average at 1228, which is slightly bearish, if the market closes above 1236, it would negate this weekly bearish short-term trend. The weekly momentum indicator is part of the algorithm that we use. This is the metrics for the week, the pivot point for the week. And the way we use this, the logic of the algorithm basically is that with the market closing below the VC weekly price momentum indicator of 1230, it confirms that the price momentum is still bearish. But it also tells you a close above 1230 on the weekly will negate the bearish signal to neutral. So if you're looking for signals in terms of when the market is going to reverse to the upside in complete this correction, it's 1230 on the weekly signal. The daily is 1204, and you can see the market trading above this code. 1230 is the weekly signal that would activate the weekly uptrend. Based on the fact that the market came or closed below 1230, it told you that it could come down for you to these levels here and cover your short positions in the neighborhood of 1215 or 1201. These levels were accomplished yesterday in the gold market, and it triggered pretty much a weekly swing trading signal that suggested for you to buy at these levels here. And it came right into the weekly VC indicator level of support, which coincided with the daily. The action here is telling you that you need to be covering your short positions in gold basis the futures contract in the area of 1215 or 1201. If you go long here, your stop should be 1201. Look to take your longs or partial profits at 1230, your first target, and look to take more profits on longs as we reach the 1244 to 1259 level during the week. So this defines for us very clearly the wave pattern for us, and specifically what price it will trigger and activate the signal. For the silver, the market on Friday closed at 1732. Basically it told us that the market was slightly bearish here. And let's take a look here at the daily price in silver, and let's see what the charts are telling us as we are trading for the rest of this week. The report on Thursday here closed obviously at 1732, which was above 17, and trading above the 9-day moving average now of 1687 is confirmation that the weekly trend momentum in silver is bullish. Okay, but it also tells you if it closes below 1687 that this bullish trend would be negated. So let's take a look. On Friday it closed at 1732. Monday the 16th, the market closed, let's see here, at 1730, and then it came down as the weekly momentum indicator was violated at 1712. When it broke through 1712, it told you that the price momentum was negated, the bullish price momentum was negated for the week, and that we could come down and test that 1680 to 1629 levels for the silver market. The low that was made yesterday was 1623. The high today was 77 so far in that vicinity, and so it has kicked in a buy signal from this range, or it has rejected lower prices into this support zone, recommending a buy position at 1629. And this is what we did yesterday, and we liquidated the position near the target zones, essentially, which is 1763 to 1795. So it gave us enough verification and confirmation to buy this market yesterday, as we suggested in the room. We texted our subscribers. You received this report a week in advance, so you were prepared, if you connect to this information, that this was a buy signal when the market comes into this level of support that corresponds to that blue line, or the B1 or B2 level. The futures market as well on the day for silver corresponded, or pretty much confirmed, the targets above, you might say, into this profit objective of 1763 to 1795 that was published on Saturday. So if you went long at 1629, you're looking at levels that produced these kinds of profits. And we use the daily algorithms as well, as you can see here, to activate our profits for the day. We use the weekly prices to activate the prices for the weekly. So the weekly objective is 1763 to 1795 for the silver market so far, based on this on last report that was published on the 13th. So basically, this is how we use the information in identifying the signals that we basically apply in the live trading room here at the Equity Management Academy. I want to point out to you that the signal that we're carrying right now in crude oil is a live signal that you see here, and now we're basically, we bought it again at 860. The market is rallying into the level of the VC code that we've been able to identify, and continuing to move up and continuing to build profits for us. And this is simply just reviewing, going back to the algorithms that were produced yesterday, that you receive by basically 7 o'clock Pacific Standard Time. This incredible algorithm allows you to trade futures as well as ETFs with incredible success. And so here is the buy signal that you receive by 7 o'clock, the two levels that it recommended for you to buy the UCO Bloomberg ETF in crude oil that we use to trade and maintain a position overnight. We're going to continue to hold on to this position here for the rest of the day, and or unless we decide to take the profits at the market. But so far it looks like it's going in our direction, and we have already the objective in place. We knew this coming into today, and all we have to do is basically let the market do its thing at this point. So this webinar served basically as confirmation for how we execute the information and how we trade the information in real time, pretty much executing the same intelligence that you receive in the room. I suggest that you take profits right now in the UCO at the market, flatten your position at the market, and we have liquidated another trade with a total of $600 on UCO and $300 profit in trading in the crude oil futures markets. Any question at all, please feel free to call me at 805 area code 418-1744, or feel free to email me at support@ema2trade.com. That's EMA, the digit number 2, trade.com, ema2trade.com. It's been a pleasure to spend some time with you, my friends, in the real-time trading coaching that we do. And until next time, be well, take care.